and that hurts producers. Okay? They also could not afford to buy on a forward contract basis. In other words, they can't afford to pay producers a year out for the cocoa because that also costs money. And the hedging, the financing side, became exorbitant. It was a drain on cash capital, aside from having to pay the higher prices. So you had financial pressures, you have shrinkflation and reformulation, and to me the scary part is artificial ingredients and synthetics and the recipe changes that don't necessarily come back when cocoa prices start to ease. There's also lab-grown cocoa, and there's a big push for development for treeless cocoa. And you have that in coffee also, the Adamo coffee. And where some people are saying it tastes fine. And activists and those fighting to support the climate, okay, think it's a wonderful idea. And you don't have the labor shortages and the struggles. And you don't have the carbon footprint. So that's something to be concerned about. So where I see the positive side and the area to focus on is in premiumization. So being the country of trust, reliability, sustainability, and have cost control and innovation. And that is the messages that I've heard here in the past 2 days. Just to wrap up, I want to quickly show in terms of processors' margins and how pricing is looked at from the manufacturer side, so further up the value chain. So what you're really looking at is the price of cocoa butter and powder relative to the price of cocoa beans. And normally they move in inverse relationship. So cocoa butter prices are high and cocoa powder prices are depressed. When the processing margins are very attractive, the combined margins for the two, next slide. Okay, so when the combined margins of cocoa butter price ratio and cocoa powder price relative to the price of beans is high, then cocoa processors are going to make a lot of money because the price is above their cost of manufacturing. They're going to make money. When the ratio is low, then you have a slowdown in cocoa grind because the processors are not going to be able to cover their costs. And this is really what influences world cocoa grind, is this relationship between the price of cocoa beans, butter, and powder. What we had this past year was an astronomical rise in the price of cocoa butter, and the processing margins were at record high levels. And as a result, you would think that cocoa grind would be increasing dramatically. But because the outright price was like buying a car, a small car, okay, they couldn't take the risk. And therefore cocoa grind started to decline. Okay, so you had an unusual situation. Now the processing margins are now at more attractive levels, but the outright price to buy the product is still high, and therefore if you're strictly making money on that spread between cocoa beans and the product prices, you don't want to risk your money because you're not going to be making enough and the cost of buying the beans is too high. And so that's why there's a contraction in demand. It's not that consumers are really buying that much less. It's that the grind is coming down because of this price relationship. So here you can see that there's, as a result of this, the industry is beginning to shift to alternatives. They're substituting and they're shrinking the amount of cocoa content in products because of how high the product prices are. So global cocoa demand has been under price strain, and normally demand will only fall for a single season, but we're going to see demand fall probably for 2 years in a row because of the continued high prices and the problems that we're seeing in terms of that relationship. So look at cumulative grind. It's fallen to the lowest levels in nearly a decade. This covers Europe, North America, and Asia. So you can see the decline that we're seeing on the cumulative grind. And then breaking it out, this is where North American grind is falling. Okay, so 3 years of low levels. European grind is retreating, but not as sharply as in North America. And Asian cocoa grind is also declining for the second year. I do think grind has to come back in next season because you're basically out of stock in consuming countries of cocoa butter and powder. So you have to grind more to replace that supply. But it doesn't mean the manufacturers are changing their recipes or reformulations or making bars big again. They're not. Okay, it's purely because of the inventory and the need to grind to replenish the supply. So we have a situation where world stocks falling to their tightest level. There's going to be only a minimal rebound, possibly in 25-26. We're really not seeing it for this year. So prices will stay at above average levels for a bit longer. But just be mindful that high prices don't last forever. And that at some point, when it feels that the supply is more assured for next year, chances are the market's going to suddenly have a steep decline. Okay. So when it starts to be assured that there's higher production turnaround, then that's when prices are going to start to fall at a faster rate. So to wrap up, I'm going to quote myself, and that is, resilience is no longer optional, it's the price of entry into the market. So the future of cocoa depends on investment in research and development, disease resistance, and climate smart farming. I love the idea of the drones. Partnerships between governments, NGOs, and private industry are critical for sharing knowledge and resources. Focusing on quality, traceability, and potentially certification will be key to market access and price premiums. And the only real certainty is continued volatility, and with that, resilience and adaptation are the price of entry for survival in the new era. With that, thank you so much for your attention.